Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 29th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice the trend line remains very clear and up and to the right. If we kind of zoom in here a little bit, you'll see right in here, very clear trend line for this channel going up. Another one going down here. Something we talked about last week was the fact that price had stalled out at these highs, and we mentioned that that could lead to a pushback to the bottom of the channel, perhaps back to retest the previous month's close. I mentioned if that were to be the case, it would offer an opportunity to buy this thing and return it back up toward highs. And so far, that's played out very nicely here, just ahead of today's FOMC. We have FOMC statement today, followed by the rate decision at 1 o'clock p.m. Central, 2 p.m. Eastern, and that's going to give us another data point. As we talked about before, this data point is very important, and the market remembers it not only weeks out into the future, but also months out. For example, here in May, you got July, and also September. Those were reports when the statement and the rate decision came out, we had sell-offs. After the sell-offs, we would get a return back to retest each of those levels at some point down the road. So that's kind of the scenario number one. The next scenario number two, not in any order, is that the FOMC level comes out and it goes bid. Usually a retest at that zone can also go bid. In this case, a higher low, as this thing was on a breakout. The next time it came around was also here in December, where it went bid. Again, pulled back, and then it continued higher. This is on a breakout phase. So we've seen that type of thing happen again. Here's one that went bid, the retest bid, and it continues higher. So those are the two main scenarios that can happen here after today's session. The bulk of the movement could happen Thursday and moving forward. But it's hard not to see this thing just continuing higher here. It would have to take something to really take out this pivot low and close below this previous month's close in order to really push this thing back down toward around 30-40, and perhaps even lower if it really got going to the downside. But right now, all signs point to the upside until proven otherwise. All right, let's take a look here at the NQ. Again, very similar analysis for the NQ. They're tracking very closely right now. Each of these, again, very clear uptrending channels, and you can see here this one held a very clear LVN right there. That's what we talked about last week. That LVN held very nicely yesterday, and over the course of a couple of days here it formed a rounded bottom, which we talked about yesterday as well, and that rounded bottom led to a great breakout to the upside, which could easily lead this thing to retest recent highs here. We have this D-shaped profile, and right now we are on the swing move up. Again, hard not to see this thing just continuing higher here in the near term unless something changes. Again, one thing to keep in mind is if this were to turn down, this LVN is very important because a break through it would suggest a return back toward the previous lows of the month. All right, let's take a look now at crude oil. With crude oil, we've seen a significant decline here. One thing we talked about yesterday is how narrow the 2-day range was, very narrow, and now we're starting to get a break to the upside. This one here had API that came out in the previous session, and today we'll have EIA report come out. That's going to be very important here for moving forward for further volatility, but already right now seeing quite a bit of strength here through these highs, and that could lead to a continuation higher. Because again, the 2-day range breaking through 54 or 53.85 to 54 was going to suggest much more upside trending behavior, likely up toward 56, maybe even as high as 57. So this is going to be significant here. Can this thing hold a breakout point here of about 54, 54.10 today? If so, it could be much more upside. Now again, I still believe that we have more downside to be seen here until we really wipe out and test those lows. So you have these lows down here, which is between 50, 50, and 51. So basically under 51, under 52. We haven't gotten to even 52 yet. So we could see a pullback and another big flush here at some point down the road. Let's take a look at gold now. All right, with gold, we've seen a big break to the upside, and we've seen a pullback to that breakout point, and we're just holding it. We've talked about before that on this pullback, we need to hold the 1565 to 1570 zone in order to suggest more upside. However, with the way that this thing is pulled back, and we're up here in the zone here that really hasn't seen much acceptance, you can see there on the profile, it would be easy to see this thing fall back down and perhaps return back toward 1525 to 1540. Again, if the overall broader market is going to see another leg higher, perhaps gold at the very least stays within the range, and at most goes a little bit lower and takes out the lows. So again, keep an eye on recent lows here. Call it yesterday's lows at 1564s. A break below that zone could open up quite a bit more weakness back toward the 1540 zone, or perhaps even lower. All right, that is it for now. Keep an eye on later on at 1 o'clock p.m. Central for the FOMC statement and the Fed interest rate decision. That should give us a great move to come over the following days and the following weeks. All right, see you in the trading room. Take care.